comment I want to make for you to comment on. So it is very volatile. We've seen a big sell-off in tech stocks, but the indexes are still pretty close to their highs. So obviously there's winners and losers, and it seems to be kind of net offsetting. The winners are sort of offsetting the losers a little bit. Do you expect that to continue, or are you concerned about a broad sort of sell-off?
What we've seen
sort of
is
12 months.
It's such a fascinating market. We've got this massive churn beneath the headline, and the S&P 500 is a bit like a swan swimming across a very, very, very calm lake. But underneath the surface, its webbed feet are, propelling it forward. But if you look at it above the water, everything seems calm. Beneath the water, there's this activity of its webbed feet. The S&P is pretty much unchanged for the year. Might be slightly negative, but within that, you've got, for example, which is good for us. Smaller companies have significantly outperformed large caps on a year-to-date basis. In fact, over the last more than a year-to-date, over the last 3 or 4 months. So you've got this broadening in the overall market, and names like Microsoft, were down at its recent low from their late October, early November peak. They were down over 20, 23, 24%, Microsoft. And then you've got other names. Amazon hasn't performed well over the last 3 months and on a year-to-date basis. And these are the hyperscalers that are being penalized by the market. They're saying, show me the money. The market's saying to these hyperscalers, show me the money. Show me the return on invested capital. Google, however, has been a very strong performer on a 3-month basis. So, it's kind of interesting. There's a dispersion and a discrimination taking place. For much of 23, 24, coming into 25, the so-called Mag 7 all rose together in a uniform manner. Now we've got dispersion within the Mag 7, and we've got much dispersion across the top 500 companies in the so-called S&P 500. Beneath that, smaller companies are doing well. Why? Because we've got a strengthening in the economy. We've got deregulation, which small companies love. We've got actually fairly strong bank lending. The bank credit numbers are quite robust. And we've also got the advent of the One Big Beautiful Bill. So the earnings profile for smaller companies looks very robust. So those are some of the reasons, Eugene, we had these conversations last year and said we thought smaller companies would perform well, which they have. But that's come at the expense of some of the really big names like Microsoft, as I said, which have really underperformed the market. So it's going to be very, very choppy. Financials have been interesting. Transportation stocks got smashed last week. We got fund management names getting smashed last week, all a consequence of the potential disruptive force of these so-called agentic AI tools.
Yeah, okay. So we've got a range of different factors, positive and negative. Obviously, those growth numbers, and let's not forget the new Fed chair coming in.
Yes,
in a few months, who's going to be very dovish. I think, although I would imagine a lot of that's probably priced in because that's been expected for a while. So we could go on and on and on, but I guess it's going to be a really interesting few months.